Nike stock, ticker symbol NKE, is down almost 20% after they reported earnings on June 27th. The street got spooked after a very weak guidance that the CEO provided on the earnings call, and then what we have seen so far is major sell-off and many sell-initiated ratings. Unless you are living under the rock, you pretty much know what Nike is, what do they produce, and it is one of the most recognizable brands across world. Is this sell-off justified, or is this just an overblown reaction from the street? So in today's video, we will take a look at the earnings report. We'll do some technical analysis. I'll show you the trade that I am in, and if you are an investor for long term in Nike, what you should be doing at these levels, or if you want to invest or even trade Nike, what you could do. So I'll give you a couple of options as well. If you enjoyed today's video, make sure to give us a like, and without further ado, let's dive in. Nike reported its earnings on 6/27, and at the time of this recording, they closed at $75.37, down almost 20%. If we look at Nike's performance in the last 1 year, they are down 33% from their all-time high. The 52-week high was $123.39. Year to date, the Nike has also underperformed. They are down 30%. Start of the year at $108, and now they are trading at $75.37. Of course, this has also impacted their market cap. Their market cap is now down to $113.76 billion. Currently, they are trading at a forward PE of 22.53 and a forward EPS of 3.35. Beat their EPS by 17 cents, 1.01. They even beat their GAAP EPS by 16 cents, which came at 0.99. They missed on the revenue by $249.51 million. Their revenue came out to be about $12.61 billion. For the upcoming quarter, which they will report their first Q1 2025, their EPS would be about 54. That is what they're expecting, and their revenue will be about 11.65 billion, which is of course lower from what currently they brought in. Unlike your tech companies or software companies that have a pretty stellar record, especially when it comes to reported earnings, Nike unfortunately does not. We see a lot more misses in the revenue and some misses in the EPS. When they reported earnings on 27th, we saw a slew of either downward revisions on the price target or the downward revision on the ratings. We got a couple of downgrade ratings from Morgan Stanley, Stifel, JP Morgan, Raymond James, and Barclays. However, we saw a ton of price target reductions all across. So now we have price targets anywhere from $90, $80, all the way going up to about $100, $105. So there is a lot more downward revision or downward pressure on this stock, at least for the short term. So if you want to read on the earnings report, I highly recommend go to Nike's investor relation and download this to read through the details. But here are the three main points why we saw a major decline or major sell-off on the Nike. Number one, Nike saw a major decline in the lifestyle business segment. To counter that, on the earnings call, they mentioned that they will be launching a lot more products and they're going to be looking at and adding to this portfolio. But just like any innovation or launch of new product, it would take some time, maybe 2 quarters or 3 quarters before you start to see some changes and a different trend. The second problem that we have is the uneven trend in the revenue for Nike. In North America, we saw a decline in revenues. In EMEA, it was flat. In Greater China and Asia Pacific, we saw major increase. Along with this trend, we also saw declines in the digital channel for Nike, because these are your guideposts to see whether we see Nike recovering in the next 2 quarters or we see further declines in Nike stock. If you are going to be investing in Nike, you want to find a price at which Nike is selling at a fair value. The fair value is about $86.64. So you do have an upside of about 15% if you buy the stock at these levels. This is a weekly chart for Nike, and you can see that we have had a solid continuous run upwards, just like an S&P 500 chart. It hits its all-time high of $173, and then we started seeing a decline. Switching to the daily chart, stock was trading in this range bound, but it was making lower highs, and we saw this massive gap down right after the earnings. We have covered this already. A lot of volume that comes in around this level of about $90 $82.51, which makes sense because this is where most of the trading has been happening since the end of March, all the way going from 79 to 86. There is not much volume because the stock has not seen these levels since, I would say, 2020, when the stock was down all the way to $57 when we saw the big market crash in March of 2020. This double-digit decline should not come as a surprise to you when it comes to Nike if you have been tracking, trading, or investing in Nike. So this earnings report, we saw a gap down of almost 20%. The previous earnings, we saw a gap down of almost 7%. Prior to that, we saw a gap down of 12%. So last three earnings, we have seen gap downs. The one before, which was October of 2023, we saw a gap up of almost 12%. So another double digit. Before that, we saw this gap up of 13.7%. Before that, we saw a gap down of 13.91%, and so on and so forth. So pretty much you will see that Nike's earnings have seen these kind of gap ups and gap downs more often than you can imagine. The current RSI is, of course, has dipped below sharply. It's at 18.3. So where could we find some support levels? So at these levels of about 73, 74, we do see some support coming in for Nike. But if we see further decline from here, we could see the lows of 57.35, which was the March of 2020 lows. Now, considering Nike is a very well-known brand and is one of the most recognizable brands in the world, so assuming this is the end of the road for Nike is definitely not the way to think through it. In the 2025 fiscal year, which is the next 4 quarters, we are going to see some negative year-over-year growth for Nike because they are going to be bringing about $49.15 billion. You need to also think from a perspective that generally with the higher inflation rates and kind of decent unemployment rates, people are trying not to spend money, and these are, and a lot of the products that Nike sells are discretionary spending. So of course that is going to play a role, and until we see improvements in those macroeconomic conditions, we may see a continued trend for products like these. Now going into 2026 fiscal year, we do see a revenue growth of about 6.45%, about going to $52 billion. Similarly, the following years about 5.19, and so on and so forth. But you are not going to see any major double-digit growth in Nike for the foreseeable future. Now, every time the market shows this kind of an overreaction, I tend to take a trade, especially for companies like Nike, Starbucks, Apple, Amazon, etc. These are the big brands everybody knows. So I took a trade on Nike with a 1 week expiration. I sold 2 puts for Nike for $75, which is almost at the money, and I got a premium of 1.31 per share. So basically it reduces my cost basis to about 73.7 more or less. And what I'll be looking at, if on July 5th Nike stock price is 75 or below, the stocks will get assigned to me and my cost basis will be the 73.70. However, if Nike stays above $75, I basically profited $262 on this particular trade. So this was a good way to take advantage of this massive fall, especially in the overreaction after earnings. So should you buy Nike at these levels? The first thing that you want to notice in Nike is how does Nike trade in the next coming days? Considering the next week is going to be a very slow week because of 4th of July, we may not see much action and slow market. So what you want to see is Nike is able to find a floor or a support at these levels of 73, 74, 75. If you already have Nike in your portfolio and your cost basis is above this, I would start to dollar cost average at these levels. If you do not have a position in Nike and you want to begin one, this is what you need to do. You need to see if Nike is able to find a support at these levels, or is Nike falling down further. The next support level you want to see is somewhere between $73 to $75. They should be able to find a support. If not, they might go down all the way to $57. So assuming in scenario 1 they are able to find at $73 to $75 support level, you could open an options maybe 2 weeks out here at 75. You may get about $93 as a premium, and as you can see, the percentage change on this one is massive. We have an implied volatility of 30%, and you have a decent open interest of 539 open contracts with a delta of about 44. 4. So you can sell that option, or if you want to go further out, maybe 4 weeks out, you would be able to get about $200 on this one with a implied volatility of slightly going down to about 27%. And you do have some open interest, about 21, not a lot. The best way to initiate a position is to open a cash secured put. This way you are hedging yourself a little bit. Nike is one of the most popular brands, and if you want to buy Nike, these are the events that will help you buy Nike. Now, we talked about the fair value, we talked about different levels from a technical analysis. Make sure you watch the $73 to $75 level. If it breaks down, next would be about $57 to $65. Those are a couple levels I would track. If your cost basis is higher than what the current price is, you can start to dollar cost average in this position. If you want to initiate a position, you can sell puts to initiate the position, or you can just buy the shares outright depending upon these levels. You saw a lot of downgrades from different analysts, but always keep in mind that look, if you are investing, you're investing for a long-term perspective. Always have that long-term view whenever you are investing. Let me know in the comments if you own Nike, or are you going to be initiating the position. And if you enjoyed today's video, make sure you give us a like, click on subscribe, and ring the bell notification. I will see you next time, investor family, but don't forget to invest for tomorrow.